Hello again, guys. Right, pretty quiet day today. Apparently, Richie Sunak is going to be talking about the British economy, which is why I think the pound has been going sideways. It's Monday morning, and as you know, I'm really getting my teeth into FinTwit. If you follow me on Twitter, Chartist retweeted the news about Sunak, and so that's appreciated. The power of FinTwit, and I know I'm rambling a bit, but there's quite a few things that have occurred to me today. First thing, I just reminded myself why I like to trade pre-Frankfurt, 6 a.m. the H4 candle close. Obviously it depends on your broker, but mine is aligned with the USA market, and I think most H4 traders or traders that are aware of this choose to trade on that time zone. So it's GMT plus 2, and that H4 6 a.m. candle seems to close, gives a bit of volatility, get some trades before the Frankfurt and London Open, and then you can chill out and pick and choose some decent trades. So it works for me. DAX on Friday was absolutely diabolical. The price action during the Frankfurt Open, absolutely all over the place. So a lesson learned there. Reduce your screen time, pick your trades very carefully early on, and you can have the rest of the day off, which is what I've done up until about a year ago, until COVID started, to be honest with you. So as such, my learning curve has been really affected by that. You know, I could always trade, and I've always traded this method, but missed out on so many other opportunities. Stock trading, indices trading, trading different hours, in particular trading the US markets open at 2:30, which I absolutely love. So, you know, trade pre 7 a.m, have the rest of the day to yourself, come back 2:30, have another go, check the ADRs, see if there's any overextended stuff, and trade that. As it happens, now we're in lockdown, you know, there's not a lot you can do outside without getting the law banging on your car windows, so might as well just study the charts on the cold wet winter days. So we're looking at this CAD, nzdcad. It was a call made on Twitter again, and I just thought I'd make this video of how I analyze other people's calls. I know I've done one before recently, but there's no harm in doing them again. So this is quite an interesting chart. First thing I wanted to do was look at the monthly, see what's going on. The call was made on the 15-minute or the hourly, I think, actually, but I always want to start high so I can see we've broken critical levels. Look at the line chart, and you can see we've closed above the resistance level on the candlestick chart there, and we have closed above this supply area here on the line chart. Clearly nice 1 2 3 lower high at this point. That was the breakout above there, and then we've popped up, come back and tested it again. Probably see that. Yeah, there it is, testing it, and then continued on up. Nothing on the RSI because there's not enough data to fill the RSI up. So another monthly high up here. That's why that's or rather a flip zone. I think I drew that on the weekly, to be honest with you. Yes, I did. Another level up here on the weekly at that flip zone there, and price, as you can see, has pushed on up, and we've got nice data on the RSI histo. There was a good bust up, pullback. We've got an internal break and close there, combined with the 3CR about here, and then another bust up through the 20 level up there as well. So not much else on the weekly. We can draw a few levels on there. You can see there's a gap there. Pull this over a bit. Oops, why didn't that happen? A gap between there and there that was filled. So, you know, we talk about those levels. So shame it's after the event, but this isn't a pair that I normally watch. Then we have a pullback in process now. We've got the trend pushing up on this daily chart. The daily is showing us that we've got the pullback going on. There's a little bit of divergence here, but you know, I'm a scalper. I'm looking for 7 or 8 pips, so we're not too worried about that, providing the strength is coming back into the lower time frames. So have a look at the H4 now. Well, let's have a look at this daily actually closely, because this was one thing I didn't check, where the open price of today was. So the open price was somewhere around here. We probably had a gap by the looks of it. So there's not much to be gleaned from that particular chart, except for we're bouncing off the A3 candle reversal level. It is sort of inside all of this lot. So if you were going to trade this short, you would trade the close below there to there, or the flip zone. But it is a messy one because that's the highest high. So but as it is, we're looking at longs anyway. That's the 3CR on Aaron's brilliant indicator. Thank you again, Aaron. So we might as well put that in actually. Oops, wrong one. Well, won't hurt on these time frames. On a daily, it doesn't hurt to have the low of a daily candle there. Very strong anyway, so we can leave that mistake. There's the 3 candle reversal level. I'll highlight that so we know what it is. Then we can see now the call for a long on this. This is why I'm interested in this. Nice strong run of red candles. So there's no sort of flip area in there. I haven't looked at the line chart on this, but we'd hope to see a pretty smooth line chart there, which would suggest a gap. Most importantly, we've got a consecutive run of 3 green candles. The perfect scenario would be a big red and a tiny green. That's the vol bomb a la Simon on Twitter. Thank you again, Simon. So well, thank you for the name at least. So now we've got this formation, the 2B reversal. So you could this will be a significant level, because Victor Barandio says any level that comes through here breaks this. This is sort of your swing 1, 2, 3. Draw the low of swing 1. The candle that breaks it, oddly enough, or coincidentally enough, on this H4 chart is a daily open. So but what Vic says also that I don't talk about very often is if you read his wording, it is the candle or any subsequent candle that has broken through the level, the high of the subsequent candle. So in fairness, we could use this green. In fact, no, that's wrong, because that's pushed up. That's the wrong direction. So that is the resistance level there for this particular 2B. And then down a step again. So what have we got here? We've got it attacking the reversal level as well. That's the penultimate high, penultimate low rather, ultimate low. And then we are currently trying to break above the ultimate lows high. And then we're testing that one as well. So we can attack these levels if we are given the right sort of signals on the RSI and so on and so forth, and also the a decent gap. You know, you've got to take your spread into account. So H1, well, let's just finish drawing those levels on those H4 candles just in case. Yeah, we've got one on that one. So yeah, 2B pattern forming off of a strong support level here, this whole supply and demand area. If you look at the line chart, it'll probably be clearer. Yeah, any of these kinks are supply and demand. So we can see we've come off this whole kinky area here, if you like. It's a good word to use in trading. I don't think I've ever used that before. There. And then we can check what's going on. This is the obvious supply area up here, or the first one. This is where Vic would say the 2B should go to. Of course, it makes a lot of sense when you consider that is supply, that is supply. So we could draw a couple of levels on there as well. Remember, they are vague, so we draw them vaguely. They're just, you know, visual aids to tell you what potentially you're looking at going for. Always use the candlestick highs and lows as absolute ultra precise levels, and then the supply and demand zones are a different thing entirely. So H1 now, back to the candles. Apologies for all the lines on here now, but you see the reason for them. So we have had an H1 3 candle reversal up. This resistance level has repelled price at the moment. So the guy that called longs, I think it was actually a retweet from an institutional, you know, the sort of thing brokers put out. Oh, New Zealand looks like it's ready to go. Well, actually it does look like it's ready to pop, which is why I'm studying it and analysing it now. That's it, precisely the reason. So, but what I'm talking about is how can we trade it? Well, you know, we've done the analysis now. We always use our 3 candle reversals and the RSI histo. Now we're on this level, we can clearly see the power to the downside as well. Still no divergence of any sort. It's not off this ascending trend line. There is no, you know, the people that would hit this, apologies for that, the people that would hit this just hit it blindly because the broker has said, yeah, this is going to go. Or, you know, they've, in my opinion, they've not got the right analytical analysis type method to do the job properly. This has taken, you know, best part of 17 years or possibly best part of 18 years now to be my final sort of, well, as much as I think is possible. Apart from targets, this has become my final sort of method. The execution entry method is, as far as I'm concerned, as perfect as we can get. Nothing's 100% in trading, of course, but targets are so subjective, and you know, that is where perhaps you could say I stumble, but there again, you know, my win rate is above, I always say it's above 90 and below 100, so you know, but the more pips you go for, the more likely you are to lose. So that's why I'm a scalper. And that's about it, guys. So what we need to happen is we have to watch this pullback now, and if it pulls back and negates an H1 3CR, the long one, then we have to wait for a new one, or we trade to the levels internal to that. I've talked about that many times. And then we have to watch these lower time frames and do the exact same thing. So if this reverses to the downside with a 3CR, then we must wait for it to reverse against itself to the upside. So we can see Aaron's level here. If this closes in 12 minutes down, then we have to wait for the reversal against that 3CR down. If this doesn't, then we can consider entering this on the 5 minute, because the 15 minute, apologies, I'm getting ahead of myself, the 15 minute is reversed down, the 15 minute failed to reverse up, the 15 minute is reversed down again. What this is now is a 1 2 3 lower high, high, low, lower high. It's actually made a lower low. That's a trend. Although if you look at the line chart, I can see clearly from these wicks here, the line chart will tell a different story. We've got a trend up. We're trying to trend down. It won't be trend down until this is tested, and then this low is broken with the new low there. So this is just a swing down at the moment, which is why this is potentially still bullish. Always important to check those line charts. So now we are waiting for an M15 reversal to the long side, which would be this candle's high at the moment. If this come down and break the low of that, then obviously we've got to draw our reversal level, which Aaron's indicator will do automatically, of course. And everything on these charts is free on my Twitter feed. Just do a search on the Twitter feed for indicators and you'll soon find it. So yeah, as we stand, just double check that's not got to low there. No, it hasn't. As it stands, we need an M15 3CR up, and then hopefully this ascending trend line will stay intact as well, and we are good to go, potentially. So thanks for watching. Sorry for the long-winded video. I didn't intend to make a video, so that's why I haven't got total clarity of thoughts. A bit rambling. Thanks for watching. Have a good day.